Good evening, traders, and welcome to Phoenix Blues Daily Update. Hope you're all very well today. Today is Monday, the 25th of September 2017. My name is Nishal Patel, and I'm going to be guiding you through the markets for today. Now, we've had an eventful start to the markets. First thing this morning, as you can see, we'll first start off with economic data. We haven't had too much in terms of data release today. We've only had one key data release, and that was first thing this morning during the European Open on German IFO business climate. As you can see, statistics on the screen show 115.2 to 116 expected. It's a little lower than what was expected. Obviously had an obvious knock-on effect onto the state of the euro, which didn't start off too well, especially with the political uncertainty, and I think that's the huge talking point for today, and that's the primary driver for much of the markets today is the political uncertainty surrounding many countries, not just the euro. We did have election results come out from Germany, where Angela Merkel has effectively retained her leadership role in Germany to serve as another term as the German leader, but has not won, or her party has not won by a ruling majority, which brings into the fray, or brings into the government effectively a potential coalition between her party and another. There's also been another party, or a far right party, that has been backed in the course of this election. It's the first time in over 50 years where Germany has seen a far right-wing party within their parliamentary ranks. So that brings in a certain amount of uncertainty, and that, together with the German IFO business climate figures, really didn't help the euro first thing this morning. It started off on a very tender note after gapping down straight from the open, and then looked more and more uncertain as the day went on. Yields, or 10-year treasury yields from the Bundesbank, didn't really do too well either, so they started falling, and that in turn had a knock-on effect directly straight onto the euro. As you can see on the screen, there's been a number of keynote speakers throughout the course of today. We had the BOJ Governor Kuroda from Japan speaking very early hours of this morning. That didn't really help the state of play of the Japanese yen, but more so, I think, the political or the warmongering with North Korea really isn't helping the state of affairs with the Japanese economy, and most importantly, the Japanese yen. So we did have also President Draghi speaking. Draghi again was speaking about the tapering down of the QE, and that it's not going to be too easy, and it's something we've spoken about in the past, and I've mentioned it before to you guys, that obviously it's the first time in history that we've seen an unwinding of QE of this scale, so there is a certain amount of uncertainty there. He tried to be as hawkish as possible, but there's only a certain amount of hawkish behavior or tonality we can read into from him, especially with him using caution every other sentence. So again, that didn't have a favourable effect on the euro. It wasn't immediate, but it did filter down into the markets gradually over the course of the day. As you can see, we did have some key FOMC members speaking. Dudley, first thing during the US Open at 1:30 p.m. local time here in London, followed by Evans, which he's pretty much just finished about around 45 minutes ago, to be precise. Dudley was quite boisterous or bullish, I would say, in the state of the health of the US economy, buoyed on by some key figures out from the US, mentioning the fact they look really good. Evans, on the other hand, was slightly, let's say, slightly more cautious in respect to inflation data coming out in the US. Again, something we picked up on last week after the FOMC statement, something we've mentioned in the Phoenix Blue Daily Update. Obviously, with inflation data not doing too good, or inflation levels not too good right now in the States, well below their 2% targeted, and having or suffering bouts of deflation over the course or over much of this year. A rate hike in terms of from what Evans was saying should not be imminent and should really be delayed. And so two different takes on two FOMC key reps there. Definitely tells us where both Evans and Dudley lie, in particular on that dot plot that we saw last week from Wednesday's FOMC statement. We do have the RBA Assistant Governor Bullock speaking a little later tonight, followed by another FOMC spokesperson. So is glued to what they're saying, and most certainly the market's going to be taking on board what they're saying. I think that the key details for us would be what Yellen says tomorrow at around 5 o'clock local time for us here in London. And I think that's what most people are going to be tuning in to see what she really has to say. But as I said, the political turmoil really is shaping the nature of how the markets are going, and that in turn, with a good solid technical approach, should allow you some very good entries onto the market. Most certainly they have done for us. For us, I think we have spoken about the elections in Germany. Let's not also forget about the elections in New Zealand, where again we have seen a potential coalition be on the cards there with the election results coming out, but more so with these two gentlemen on our screen. They are the leader of North Korea and again the leader of the United States and their war of words. Now it's escalating a little more, and there's no doubt the markets are seeing the seesaw effect accordingly, and what we're going to do now is just go straight to our charts and let's see what really has materialized over the course of today. So first, starting off on the US dollar index, having a look right now, the dollar's floating at 92 or just below 92.50. Key level of support resistance again, which has been highlighted numerous times on this daily update. Dollar really gapping up first thing this morning, and I wouldn't say it's really down to the overall strength on the US dollar, but more so a combination of factors, and the dollar's most certainly benefited from it. First things, but as we can see on this chart here, on this daily time frame, we can see the dollar riding high back up and testing the underside of that 92.50 area. So definite strength across across this index, as to speak, on the side of the USD. And here is the highest volume in terms of traded globally on the euro, and definitely the strongest weighting of that dollar index. Looking at the euro USD cross here, we can see that it after it opening up on this daily index, gapping down, and then following a very bullish, or bearish momentum straight off the underside of that trend line, that again, which has been left on our charts just for you guys to see, and literally falling over the course of today, and really been hampered by not only the political uncertainty of the largest economy within the eurozone, that being Germany, but also with the ECB's take on QE. So a number of factors here. Moving on forward, if we have a look at cable right now, and this is another place where we've seen a definite sell-off on the side of sterling really has helped the strength of the dollar, and we can see it's literally tested the lows and taken out the lows that we've seen of this area of consolidation, and taking out the lows of 34.45. Again, we've had highlighted on our charts previously. Right now, sterling resting at 134.73, so definitely looking very bearish, potentially looking more on the short side right now, still not having closed below that area, and we won't be able to see until later on this evening. But something of note, and if I just pull this over to a weekly time frame, we can see these Brexit lows, and this fib that's been drawn on was from its swing high from when we had effectively the Brexit vote to its utmost swing low, which was around a year ago. And we've seen price action make its way all the way up back to that 1.35 area. But as we can see on this weekly time frame, we can see it's testing the underside of that area of those Brexit lows, which was key. Now, having tested that and knowing that we do have underlying strength, or in a highly devalued currency pair like the sterling and against the USD, and definitely seeing a fleeting outlook from investors on the USD. Should we see a more bullish, or should we see a bullish take on this over the course of the next few months? In my eyes, most certainly. But what I would say is potentially seeing a slightly more bearish outlook this week before we get an uptake, maybe slightly more of a pullback. And most certainly, if this bar stays this way, then many traders and investors alike will be shorting this particular currency pair. Moving on forward onto the Japanese yen. Right now, Japanese yen floating at 111.64 on this daily time frame, as you can see, testing the top side of the 618 fib of that weekly swing that we've got right now. Failing to break 113 or test 113 on that 50% retracement, but staying glued to that 618, having broken that, but as we can see right now, sitting just above it, and definitely seeing some strength creep in on the side of the Japanese yen. Now, is that also a take or a flight to safe havens from many investors? I would say so, and the political turmoil, as I'm saying, in terms of the fears in North Korea, and the war of words with Trump and the leader of North Korea is definitely having an effect on this chart. That being said, certain crosses have taken our eye. One particular trade that we have looked at very aggressively over the course of the last week has been this GBP JPY trade. As you can see on this chart, potentially, because it is a daily time frame, we won't be able to see the extent of the swing that we've seen today, but most certainly a very strong move off that 150 break that we were looking at, which was all the key, that had a nice tidy entry, and we've seen it break down to 150, so 150 flat Japanese yen to 1 GBP. So very strong movement on the side of the yen there. Australian dollar, again, it's really been slightly indecisive today, as we can see on this daily time frame, formulating up to this inside doji bar effectively right now. Right now floating at 0.794 rate, really swinging either side with the uptake of the dollar, and then the sell-off accordingly. But here's a good representation of that flight to safe havens on gold spot. Having a look at this 4-hour chart right now, breaking that 1300 area with absolute ease over the course of today on this 4-hour chart here. Right now floating at 1309. per troy ounce. Hasn't tested the underside of this trend line that we've highlighted again last week after we saw that reversal pattern play out, but most certainly, as we can see, bottoming out at that 1290 area, effectively bottoming out and seeing a clean break of that neckline back up to this trend line. So that again was a nice easy trade on the side of gold. As we can see on this daily time frame, most certainly due this pullback and a retest prior to maybe moving anywhere, but most certainly a clean flight to safety from many investors. Another big mover for today was WTI. We can see WTI riding high just below that $52 a barrel right now. As we said, having broke that $50 a barrel last week, potentially looking very looking for a move to that $50 a barrel with ease. I think that got buoyed on earlier on today with announcement from Turkey of potentially restricting or even cutting off a pipeline leading from North Korea to Turkey. That accounts to something like 500,000 barrels, or what's being stated as 500,000 barrels a day. So any kind of restriction there onto the global market will obviously push this chart long, and it has done. As we can see from this range, and something I did mention earlier on today is, despite the fact we are seeing that political uncertainty, and we're definitely seeing some moves that are affected by the political landscape, there has been some clear-cut signals for us as traders on a technical basis to allow us in, and this collection of daily bars, as we can see, actually give us a nice easy way in to potentially trade this, especially off a key level. We've also had details out from OPEC. We had them out from last week, and that really is factoring into the market this week. Definitely seeing that balance of demand and supply coming into play right now, and obviously the price on WTI pushing up, and we will see the relevant the same thing on Brent crude. So, as always, traders, if you have any questions in regards to what we're trading, or even how you would like to improve your trading, feel free to send us an email to info@phoenixblue.co.uk. Alternatively, visit our other social media channels, including our Instagram, as well as our Telegram channels, to gain a further insight onto how we're trading. Until next time, traders, happy trading. Bye-bye.